Sellers on the US housing market are freaking out right now, and we have now entered what I call the second wave of price cuts in this 2022 housing crash, where we're seeing some crazy reductions, everyone. Take a look at this listing in San Antonio. It was originally on the market for $350,000. Then they cut the price to $320,000. Then they cut the price to $270,000. Now they just cut the price by another $40,000 down to $230,000. And the great thing is that now these price cuts are reaching affordable homes. At first, in the first wave of cuts in June and July, it was mainly higher end, larger, more expensive homes that were reduced in price. But now it's homes at all price points. They're starting to get big reductions, specifically in certain cities, everyone. If we look on this table, we can see that there's really three metro areas that stand out in terms of price cuts. Phoenix, Austin, and Vegas, where nearly 60% of all of the listings currently on the market in these cities have a price cut. And as this video goes along, I'm going to get into more and more cities in terms of how many price cuts there are and how big the price cuts are. But before getting into that, as a home buyer or real estate investor, you need to understand a big trend, a big shift that is occurring in the US housing market right now. And it's a geographic shift where the places that boomed during the pandemic, they are no longer booming. In fact, they are the housing markets that are crashing first. And this is something that the institutional real estate players are now catching on to, particularly Redfin. If you go to Redfin's website, they have some great articles that come out every day on the US housing market, but I thought their last three articles were really interesting. Take a look at this, everyone. Starting from the bottom, Redfin had an article a couple days ago about how Sun Belt home buyers are backing out of purchases and canceling their contracts higher than anywhere else in the US. Then they had an article the next day talking about how more than half of US home buyers want to live somewhere with legal abortion. And so I thought that was very interesting, those articles back to back by Redfin, because they're kind of painting this narrative, they're painting this picture of, oh, people are canceling contracts in the Sun Belt. Why are they canceling contracts? Well, maybe people don't want to live in states with strict abortion laws. I don't know if that was Redfin's intention, but that's how I was reading it. Is then they followed it up with another article talking about the fact that markets like Chicago, Albany, and Milwaukee are among the housing markets holding up better than anywhere else in America, pointing out how it's these Midwest and East Coast metros that are doing the best. And so what I want to get all of you as home buyers or real estate investors ready for are two things. One is the migration shift that I believe is already occurring, of fewer people moving to the South and more people moving back to the Northeast and Midwest. Potentially even the bigger impact is the narrative shift that is going to occur, where institutional real estate investors are going to bail on these Sunbelt housing markets that they invaded during the pandemic, whether it's Jacksonville or Atlanta or Dallas or Phoenix, where these investors are buying 30 to 40% of the homes. They did that based off a narrative that people would move to these cities forever, that these cities would boom forever. But that narrative is actually never supported by the data. If you look historically, you could see that there's periods where people move to these cities and then leave these cities. There's a 10-year migration cycle in America that repeats fairly consistently. So now that the mainstream narrative is now shifting, we could see Redfin pushing now a narrative of the Sun Belt isn't as good, the Northeast and the Midwest is better. We're going to see the real estate investors follow that narrative. We're going to see them sell out of the South, and we're going to see them potentially buy more in the Northeast and the Midwest. But I think more likely it's going to be a lot of these investors are just going to sell out of the South, pocket their cash, and move on to doing something else over the next couple of years as the housing market in America crashes more broadly. And this shift and this investor selling and this panic selling, it's something that is really starting to build right now. If you guys are seeing it on Zillow, let me know in the comments, because I'm definitely seeing it on Zillow. Take this listing in Austin that's for $425,000. What's interesting is it was listed for $600,000 in July, and then they just cut the price by 30%. A 30% price cut. Like, that's a sign of panic starting to set in, of sellers really starting to feel the pressure. And this is just going to get worse for these sellers over the next 6 months, because as I've talked about many times on this channel, the fundamentals of the housing market look very poor still. Even with these price cuts, typical home buyer is still priced out of the US housing market. Price to earnings, price to income ratios are still near all-time highs, and due to the fact that mortgage rates have surged so much, the ratio of payments to income, debt to income ratio, that's now higher than it was at the peak of the 07 bubble before the last crash. And as the recession gets worse, as the layoffs get worse, the home buyer demand is going to decline by even more, just as home builders are building a record amount of homes and apartments and are delivering those homes and apartments onto the market over the next year. And this is kind of how the housing cycle works, everyone. There's a boom in the economy, there's a big run up in prices, all the builders go nuts, and just as the builders go nuts, interest rates go up and the recession hits and everything collapses on itself. So in some ways, this is kind of very typical of what happens in the housing cycle. And for those of you who have been patiently waiting, you are going to be rewarded. Particularly, I think, if you guys are looking in certain areas. I did a poll here on the channel and I asked you all, what area of a city are you looking to buy? Downtown, urban, fringe, suburban, or rural? And the results were very interesting. Almost 10,000 people voted, and 50% of you are looking in the suburbs, 25% of you are looking rural. So nearly 75% are looking suburb or rural, and that is a good place to be right now. The inventory is spiking out of control in a lot of suburban and rural areas. And to get a sense of this, I want to show you guys some data here looking at different zip codes. And this is a tool I developed called the Metro Data Dashboard. It's available to my channel members. You could use this tool for yourself if you hit the join button below and become a channel member. But the point I want to show you here in Dallas, which is really illustrative of what's going on in a lot of housing markets in America, is that we're seeing the inventory growth surge in the suburban rural fringe. Up here in a town called Prosper, up here in a town called Aubrey, the inventory is up 200%, 400% year over year. Crazy. But yet, if we zoom in on some of the urban areas in Dallas, we can see the inventory is actually going down year over year. And so what this signifies to me is that, like the pandemic boom of people moving to the south is ending, the pandemic boom of people moving to suburbs is ending. And the reason I think this is because we basically, during the pandemic, I believe we compressed like 5 years of, let's say, suburban migration. I think we compressed that into like 2 years. And it was all these people at once were like, I want to leave the city. So maybe if someone would have left the city in 2024, they did it in 2021, which means now that person isn't going to be moving to the suburbs this year or next year or the year after, just as the home builders are going absolutely nuts, building a record amount of homes in suburbs. And to understand this housing market shift away from the suburbs more to urban areas, I actually traveled to New York City. Everyone, I'm walking around New York City this weekend, and the one thing I'm noticing is that there's lots more people in New York City. Specifically, I'm right in front of Goldman Sachs headquarters right here. They just called all their people back into the office. A lot of companies now are calling people back into the office, and of course, that is decreasing the demand for real estate in the suburbs and putting it back in urban areas. So this is a structural trend, which is going to mean more inventory, more price cuts in the suburbs going forward, which is great news for the 75% of you that are looking to buy a house in a suburban or a rural area. You guys waited it out. You waited for the herd to move and pay the high prices, and now you're going to benefit from lower prices going forward. Now, before signing off, everyone, I'm going to do a rapid fire round here. I know a lot of you want to know, what are the price cut percentages in my metro area? I'm going to run through those here, so get ready if I'm going to mention your housing market using data here from Realtor.com. So a metro that's actually having a lot of price cuts, as I think is surprising a lot of people, is Charleston, South Carolina. This is a high migration market. I know a lot of you looking to buy in South Carolina. 37% of the listings now have a price cut. That is the highest level on record according to data from Realtor.com. Another metro in the Southeast that's now starting to see a ton of price cuts is Nashville, registering 40% of listings having a price cut. As I identified in my last video on the rental market crash, Nashville is facing issues on all fronts in its housing market. There's declining buyer demand, there's declining renter demand, there's lots of home building, and there's lots of investors now pulling out of the Nashville housing market, which is going to cause a big crash. But switching gears, a metro area with actually a low share of price cuts right now is New York. The New York metro, which includes the city, Westchester, Long Island, Northern Jersey. The share of price cuts is only at 14% of total listings right now in September, and you can see that's actually well below the levels experienced in 2018 and 2019 during the pandemic. So New York is seeing an increase in demand. It surprised me. I wasn't expecting so many people to either move back to New York or want to buy real estate, but that market is actually one of the strongest in America right now. Another market with a low share of price cuts is Chicago. 22% of the listings in Chicago have a price cut, and you can see that's way below the levels that occurred in 2017 and 2018. So like New York, Chicago is a City has a lot of issues, but there's still some relative affordability in Chicago, and I think that's attracting home buyers, keeping that market relatively supported right now. Then we have a market like San Diego, which is somewhere in between, a situation we're finding in a lot of California housing markets right now. San Diego, 32% of the listings have a price cut, which is way higher than it was during the pandemic in 2020. It's tripled, it's doubled from those levels, but it's still less than the price cut shares in 2017 and 2018. So San Diego's housing market, LA's housing market, it has slowed considerably. Prices are going down, but we're actually seeing the situation, funny enough, where inventory is now starting to decline in San Diego and Los Angeles, a situation I think is perpetrated by something called the lock-in effect, where due to high mortgage rates around 7%, a lot of existing homeowners at a 3.5% or 4% rate don't want to list their house for sale and give up their 4% mortgage to then assume a 7% mortgage. And this seems to be kind of reducing the inventory in the new listings, primarily in more expensive housing markets like a California, a Boston, a New York City. We're starting to see a restriction in listings, which is a good segue to talk about where mortgage rates are going over the next year. I mean, they've been so volatile over the last couple months, bouncing around between 5% all the way up to 7%. Now they're back in the high 6% range. I think a good question to ask is, where are these mortgage rates going over the next year? And my prediction is that they are going down, because my read of the macro economy is I am seeing deflationary pressures. And deflationary pressures in the end are going to lower long-term interest rates. And so my bet is the Fed keeps hiking interest rates. They're saying they're going to keep hiking, and then they're going to get to a point where the economy breaks. And when the economy breaks, they're eventually going to be forced into a pivot, and that pivot is going to lower the rates, but that pivot's also going to occur alongside the recession getting a lot worse. And so when the recession gets worse, that's something that also pushes down mortgage and interest rates. And really in the interim, I mean, the housing markets that are most exposed, we talked about a lot of them in this video, but it's any city that boomed during the pandemic, where prices surge, where there's a lot of real estate investors, where there's a lot of home building. Those investors, those home builders are going to continue to cause a flood of inventory to hit the market.
All right, everyone, back to New York City for a second here. One thing I got to tell you guys about is my experience here this weekend. I mean, I was shocked. New York City is back and then some. I mean, there's more people here, it seems like, than there were before the pandemic. I tried to go to like a comedy club on Sunday night, couldn't get in, tried multiple times, going to different bars. Packed. It really does seem like New York City is back to the level that it used to be, at least with its like younger population that's moved back here. Maybe you still have kind of like families moving out with some of the violence, some of the issues with homelessness on the subway and things like that. And really what this tells me, everyone, is that the pandemic did not change nearly as much as people thought. Like, yes, yes, there is like an increase structurally in working from home, but more and more it's becoming evident that this cycle of people moving around America into the South, into the suburbs, it's just following the same 10-year migration cycle we have seen over the last 30 to 40 years in America. And I'm curious, what do you guys think? Let me know in the comments below. Do you think New York City is going to have a rejuvenation? Do you think LA and Boston and DC are going to have a rejuvenation? Or do you think the South is going to continue to reign supreme in terms of attracting people and in terms of growing its housing market and population? I want to hear what you guys think, especially if you are someone who is making this type of move right now. Where are you looking to move? Where are you looking to buy? Do you know someone who moved to the South and then moved back to the Northeast? Or are people that you know still moving to Texas and Florida? You guys are my eyes and ears on the ground in the U.S. housing market, so make sure to leave a comment below.